The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Overall quietness in the markets to start off the trading week. We got a little bit of a pop in soybeans late in the session and bean oil, but everything else was relatively quiet. Livestock trade was down a bit, while meantime we watched stocks and energies trade a little bit higher. Stock market set all-time records on Friday. Let's talk about what's happening in this market trade. Joining us for a conversation, John Heinberg with Total Farm Marketing. John, good to catch up with you again. And if you were like me, hopefully I was starting to doze off watching some of this trade action on Monday. Hopefully you didn't doze off too. Man, just real quiet action to start off the week, John.
Yeah, definitely in the corn market, wheat market for sure. I mean, you go look at corn closes the last 3 days. I think we're within a penny of themselves every day here at this 445 window. And considering the low off the report was 447, we dropped to 443 after that. We're talking basically 4-cent trading range on the closes over the last 5 days. So prices are consolidating, just looking for some news. It continues to be extremely quiet. These got a little bit in that bean market today there, led by the soybean oil market, maybe trying to find itself a little bit of a bottom. And then wheat just kind of played along today too with just some mild gains. So realistically, for a Monday, this market's looking for some direction and really didn't find any news overall there.
Well, let's talk about this market a little bit more in terms of risk management, John, because you and I have talked about this quite a bit. Even in quiet environments like this, you got to be smart with your marketing here. A lot of folks are reassessing things. They're not loving the price action that we're seeing right now, but yet you got to protect any sort of downside risk, because to me, I'm not seeing much in the way of a bullish story for these grain markets here in the short term, John.
Same in boat. I mean, we agree with you totally in that regard, and one thing I've been talking with a lot of guys about, we got these at-risk bushels that aren't priced, and nobody likes where we are right now, especially in the corn market or even in the bean market in terms of overall value that's out there. But things can get worse, and you look at the charts. Are we consolidating for one more break? Do we have a turning point here? I'm not sure what the reason is, other than it's just cheap enough. My charts are still pointing to a downside target, maybe another 20 cents down or so. That falls into some of those longer term charts. I've been doing a lot of work with shorter term puts. Option volatility is really inexpensive right now. Just get a floor under those bushels. We talk about market cycle of emotions, and we're kind of in this window now, when prices are at their peak, everybody's just feeling good or, euphoric about price. We're kind of in this fear, depression, borderline panic mode, because guys are looking at the bottom line and going, I need this thing to turn around or it's going to get interesting. Leaves us basically one more page, which is the capitulation and that hopeless feeling when prices do break one more time. I'm kind of watching for that window, maybe if that occurs here, if we do see things roll over and guys just kind of throw their hands up in the air and say, all right, I'm done. I got to move this grain or whatever. That's the window you want to start getting you got the maximum potential upside available in front of you. And we've got to our bottom side. So I think we're just still a little short of that, unfortunately. So I'm kind of thinking that vein at least. And we just got a lot of, especially in the corn side, some front end bushels. We got to get moved here. And, the weather's not helping that, but at least at the same time, this bush, until these bushels get a home, it's going to keep this market pretty heavy. And now we're starting to look at what's coming down the pipeline. Argentina is going to have a large crop. Brazil's, soybean harvest is going well. So that means they're getting planting in ahead of pace. And, those are just stories and headlines that are going to just make it difficult in this marketplace going forward here.
I wonder, John, the stocks making all-time record highs, a lot of fund money, managed money feels like it's going into the stock market right now, spilling into energy somewhat. Do you feel like some of that money going into the stocks could potentially, stocks give some support to commodities, or is that a bad thing for commodity action right now. What do you think, John?
Well, I think if you look at the money flow, it's leaving the commodity space, the anti-inflation play, and it's looking for a place to go. And the stock market is hot right now. I mean, we looked at a market last week that felt like it wanted to reverse over, maybe take some value out, and next thing you know, boom, explode higher on Friday, new highs again today. So that's at least the place where the money wants to go. Right now in the grain markets, they're still pushing short positions. They still got room to go. We took the 2019 funds, went about 350,000 short contracts, or about 70,000 off of that total before they turned it around. There's still some room for them to push this market. Soybeans realistically aren't that short yet at this window. And with the news that we're seeing out of South America, that's going to continue to be a difficult position to get turned around at this time frame. So right now, I think it's still buying one versus the other, and until maybe we do get something on the stock market side or the equity market side that brings some major correction, and then the funds might look around and say, hey, corn's pretty cheap here, or soybeans are cheap here, and then we see that money flow in. I'm just not sure we're at that point yet here so far on the calendar year.
With the supply situation we have out there and the numbers that USDA gave us here on the January reports, what are you hearing from folks? Do you think we could see some of that shift from, away from corn acres to soybean acres here in the U.S.? I think that could be a potential storyline as we move into spring planting, John.
It very well could be, but I mean, if you just sit there and go look at the ratio, what we're talking about right now, we're not quite at that level. We're about 2.5. So things are actually fairly priced in the new crop corn bean ratio. There's two ways you buy acres. You raise the price of one versus the other. You crush the price of one versus the other. I'm still a little worried that we're in the second camp right now in terms of bringing prices down. So at this time frame, I think a lot of it's going to depend on demand, what the USDA does with that soybean demand story going forward. We got export inspections today. They were within expectations. They're okay, but it feels like our window is really closing very, very quickly for soybeans in terms of new sales. So we'll have to watch that, because we get into the next report here as we get into, February, March, and April, before we get to that acre, we get the acre number in March, but before we get into those final planting intentions, if they go throw another 20 million on the balance sheet just because of export demand, now we're over 300 million. Now the supply doesn't look so bad. There's some scenarios out there that are a little scary yet that can come into play. But look at some of those December numbers for exports out of Brazil into China for both corn and soybeans. Okay. Massive amount of soybeans went into Brazil corn went into Brazil in the last couple of months here. Most of it since the start of the marketing year, and a good portion of those being, those sales came from the United States and replacement, in that regard. So it's going to be interesting to see how this all kind of pieces together. But right now, that's the big question to me, is the demand side of the equation. Even for corn, even though things are a little bit ahead of pace right now, does that maintain itself, especially if this Argentina crop comes in at 60 million tons, as some people are talking? That's a big export book that they're going to put out there that's going to be difficult for us to compete with, going forward.
John, talk to me about the livestock trade. Cattle and hogs a little lower on Monday. Cattle on feed report looked to be pretty much in line with expectations, and I think a lot of that was already factored into the cattle market. What's your take on the protein sector to kick off the week? Real quiet day, kind of a tougher start, but we came off those lows very nicely. Might have turned into a bit of a buying opportunity, especially in like feeders. Talking to the guys in Countryside, feeder prices versus the board are significantly different. So here we had $2.50 down on the open. That was probably a window maybe to get some feeders locked in for some people. A couple big things, cattle on feed numbers, like you said, within expectations, placements still below 100%, still seeing a large amount of heifers in the feedlots. So when we get that cattle inventory report coming up here at the end of the month, I don't think we're going to see that beef cow expansion or that beef herd expansion too. So still keeps me a little bit friendly, the cattle market. I definitely like the third and fourth quarter here. The market's kind of priced that in. December cattle up to 183 on the lives today, pushing 260 out there for the feeders. Again, just showing you that there could be some supply tightness down the road again.
So keep that on your radar now. The only thing we really got to keep an eye on the economy, demand, things of that nature going forward. But, we talk about money flow. They're only long about 12,000 contracts of live cattle right now in the funds. They really have liquidated that position. And again, if they're just looking for a market that's got the fundamental story, which it isn't cattle right now in terms of supply, demand is holding in there. That's some of the reason we've seen some firmness today. Again, carcass values continue to climb again in this window. That we could see the funds just say, you know what, we want to own cattle again. That was a pretty good ride last time. Let's go try it one more time. And who knows where this market wants to get to if that money can give it that extra shot.
John, I think overall, whether we're talking grain or livestock markets, it can't get lackadaisical here when it's quiet. Got to manage your risk. What do you want folks to remember at this juncture right now, John?
Well, markets aren't going to do something because they have to. Okay, they're going to move based on what the money flow says, and we hear that in the ground. Oh, it's got to go higher, but does it have to? At least at this time frame, to me, it still comes down to key numbers. What is the production? What is the stocks you use? You go look at a historical chart. Corn stocks use 15 to 16% is where we were after the last USDA report. That typically gives us a range 450 to 350 on a corn price on a historical level. We got a little bit of inflation, so that puts us at the top end of that range. So that leaves me a little more concerned to the downside there, especially if the demand doesn't come through. Over on the cattle side, you've had a nice price recovery. Probably a great window to start thinking about making sure we got some protection in those safety valve puts. We talked about those like crazy all last year before this thing rolled over, and they would have been really good plays. So start keeping those things on the radar. Maybe you don't lock in profitability, but boy, I sure like to make sure we're locking in something so the losses aren't as dramatic if things do turn really, really sour.
John, if folks want to reach out to you and get some advice there at Total Farm Marketing, how can they get a hold of you?
Sure, love chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And that website of ours, totalfarmmarketing.com.
John Heinberg with Total Farm Marketing. Always good to talk with you, my friend. Thanks so much, and we'll talk to you again next week.
Sounds good. Have yourself a great week, everybody.
That's going to do it for Market Talk today. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.